our story, the story of Vopak. Because what is it that makes Vopak Vopak? What is it that really makes us unique? What is it that drives our DNA of the company? Well, there's a few things. First and foremost, our people, we as people from Vopak, are driven to deliver. Driven to deliver safe services to our customers for safe storage and infrastructure of the vital products that society needs. That is what we have been doing for the last centuries and what we continue to be very focused on. So that drive to deliver is always that is very characteristic of Vopak. Second, we have that sense, that spirit of entrepreneurship. And that spirit of entrepreneurship over the years has helped us to create the connections with different partners, with the communities, and we're very proud of it. And that has helped us to build a network of terminals around the globe that is a very strong and attractive network. So that ability to create the right connections is something that also stands out and makes Vopak Vopak. Then last but not least, it's the passion and the excitement that our people have to drive progress. And to drive progress in a world that is changing very fast. And our ability to actually, and our capability to work together with a lot of different partners helps us also to create the right infrastructure for the future energy mix. And hence that really ability to drive the progress is something that sits very close in the DNA of our people. So all in all, whatever the future holds for the company, Vopak will be around. Vopak has been around for a long term, Vopak will be around. And in a way, the way we look at it is, you could say Vopak will help the world flow forward. So that's the Vopak story. We deliver, we create connections, we drive progress, and in doing so, we help the world flow forward. Now let's take a look at the delivery of our strategy so far, our Improve, Grow, Accelerate strategy. We launched it a year and a half ago here in Rotterdam, and we want to give you an update today on where we stand. 3 main messages, which you will see on the right of this graph, of this slide. First, it's the strength of a really well-diversified portfolio. That well-diversified portfolio has proven its strength, especially in times of a drive for energy security and energy transition. So that's the first main message I want to leave with you, and I'm going to dive into it a bit deeper. Second is, we have been able as a company, and we continue to be very committed to create value for all the relevant stakeholders. And I'll show you in more detail what that means and where we have been able to deliver. And last but not least, our network, our partnerships, and our capabilities allow us to be the gas, industrial, and low-carbon infrastructure player. That's where we really feel that we have the strength. And I hope throughout the presentations of today, you get a stronger feel and understanding where exactly that distinguishing capacity and capability of the company is focused on. But first, let's take a look at the market fundamentals and the pure aspects that drive the demand for our services, and look at what's happening in the world around us. Let's take a look at the bottom left side of this picture, and just to mention a few things that are happening in the world around us. First, global energy demand. Global energy demand is growing. Between now and 2030 is growing with around 8%. Why? Global population is still growing, economic development is happening, and as a result, we need more energy. Now, the mix by which that energy is provided is changing, is continuously changing, and will continue to change going forward. What does it mean? Well, you have more lower carbon products that are going to fill up the mix of energy products also in the future. Next to that, supply and supply security of energy has become a much more important element over the past few years. Today, more than ever, it depends who you rely on for your energy supply in the future. It depends much more today than it did a few years ago. So that element has definitely driven and is part of some of the fundamentals to the demand growth for our businesses. Last but not least, you know that inflation and interest has been much more volatile and on the rise in the past year and a half. So also that has an impact in the end and has impact obviously on our business. Now, where does the business impact sit? Well, first and foremost, there's additional storage infrastructure capacity that is required. Simply because of the need for more energy, simply because of the longer distances that products are being shipped, you need more storage. Second, there's new infrastructure requirements for the fact that there is an energy mix that is changing. So simply if the volume would be the same, if the range of products that you need to supply the energy is changing, you need also new and different infrastructure solutions going forward to supply that energy to the world. And last but not least, what is very clear is there's a lot of companies and a lot of parties, I would say, in our world. You don't want to do this on your own. So partnerships and the importance of partnerships is increasing ever more. So those are really a few key elements that show you what fundamentally is driving also a very strong market that we see today in our world. Now, how are we positioned? Well, continue to be very well positioned with a well-diversified portfolio that we have globally. What does it mean? Well, we have the capabilities to deliver because we have 78 terminals, 23 countries, and more than 5,500 professionals worldwide that work day in, day out to deliver what our customers expect us to deliver in a safe and efficient manner. Next to that, we are strong with the partnerships. We have over 1,000 customers worldwide. We have over 35 different joint venture partners in different parts of the world. And actually, that brings me back to one of the points that I said in the beginning, that helps us to create the right connections on a global scale that helps us drive also the progress. So those connections and the partnerships that we have are really key for to serve a well-diversified portfolio. And last but not least, it's the capabilities. So it's the set of capabilities that we as an organization hold, which is storing over 250 difficult to handle products, managing and operating over 500 industrial connections, pipeline connections between our terminals and the sites of our customers, but also over 400 different jetties and berths that we operate on a global basis. So those capabilities help us in the end to have the right experience, also to drive the progress. So again, look at the fundamentals of the market and what you see happening in the world around us and how that affects our business. And then how are we positioned to that? That makes it for a very strong foundation of what we currently see and what we also foresee to be continuing in the period ahead. Now, how have we then delivered on our strategic priorities? Let's first take a look at the improve side. And improving, when we launched it a year and a half ago, we knew there was a strong importance for us to turn around and to make sure that we solidify our financial performance. At the same time, we also want to continuously improve our sustainability performance. And on both counts, I think we've made good progress. Frits and Michiel will go into much more detail explaining where the improvements have taken place. But if I would just highlight a few things on the sustainability side, greenhouse gas emissions, we reduced them, scope 1 and scope 2, around 25%, 2023 compared to 2021. Our safety performance has continued to improve, both personnel safety as well as process safety. We've been able to increase our customer satisfaction to an NPS score that is above 70 today. We, at the same time, also continue to invest in the communities where we are active. We have a foundation, the Vopak We Connect Foundation, and we have currently, in the year 2023, been able to start and to execute over 39 different projects in the different locations where, as Vopak, we have a presence. So there's a lot of connection again between our sites, our local organization, and the communities in which we operate. So on that sustainability side, I think we've made really good progress. If we then look at the second element over here, and that is the cash flow improvement. Around 200 million of cash flow improvement because of the passion that we have for cash, and that's also how we put it in the organization. that 200 million is indeed the comparison between where we are in 2023 compared to the same period in 2021. So you see a substantial improvement over there, and you see that also reflected in the operating cash return, which at this moment sits around 13% as an expectation for the year, or above 13% as an expectation to finish this year. And I'll show you a little bit more in the detail. Last but not least, it's the return to our shareholders. And we said a year and a half ago that we want to commit, and we stay very committed to a progressive dividend policy. We've delivered this year €1.30 as a dividend, and stay and continue to be very committed to this policy that we set out in clarity last year. So that value creation for all the stakeholders that are relevant is something that we delivered on for the last year and a half quite strongly. Now, the portfolio, because one of the elements that we said very clearly last year when we launched the focus on improve, was that we said we need to take a very critical look, continued critical look at the portfolio that we have. So it is, yes, that passion for cash that sits in improving where possible the existing operations. But there's two elements to add to that. One, it's the rationalization of our portfolio, and on the right side you see the repurposing of certain assets in the portfolio. Now, the rationalization of our portfolio, we've been able to make good progress. We sold and divested 4 oil distribution terminals in Eastern Canada in 2022. We sold, in the beginning of this year, we sold the terminal in Savannah, East Coast, US. We sold our agencies business, and we recently announced that we've reached agreement with a buyer for the 3 terminals here in the Botlek area, and expected to close that between now and the end of the year. So overall, 8 terminals and agencies that over the span of the last 18 months have been rationalized, if we call it like that. So we made good progress in that area. If you then take a look at the right side, the repurposing of some of our assets, you hear us talk a lot, and you will see that also in the afternoon, about what the opportunities are over there. And you'll see this afternoon what we've done in Vlaardingen, so there's much more to talk about. We talk quite a bit about Los Angeles, where we have repurposed existing fossil fuel capacity to more sustainable alternatives, sustainable aviation fuel, renewable diesel, attractive investments for us with long-term contracts that support it. But let's take a look at Singapore, for example. Maybe a small investment, but it shows you a little bit of what the opportunities are. Singapore, one of the terminals in Singapore supports the local bunker market, and we've been able to invest together with the customer, or with a longer-term contract with the customer, in blending facilities to blend in biofuels into the local bunker pool. You need flexibility for that, because you can't do that injected so easily, so you need some flexibility in manifolds. You need a bit of investment over there, and that's the first step to support our customers in that area, where you see that in the broader sense, repurposing of existing capacity is a very natural flow of things that is happening in the portfolio. Now, with all these steps and with all these efforts that we put into, what did it lead to in terms of financial performance? Let's take a look at the left, the EBITDA performance, the pure business performance today in 2023, with the outlook that we have for the full year compared to 2021, a roughly 17% increase. In the middle, you see the operating cash return. I was talking about that a little bit earlier, but the operating cash return as a metric to indicate the return of our entire portfolio has gone up from around 10% to above 13% expected for this year. And last but not least, it's a strong balance sheet. 3.16 times EBITDA of our net debt in Q3 2021. Today, we sit at 2.27, well below the bracket of 2.5 and 3. So a strong balance sheet, good performance of the overall network and the portfolio from a return perspective, as well as a strong EBITDA business performance that supports it all. So that's it on improve, and on the bucket and the first part of our strategic priorities that we set a year and a half ago. Now let's take a look at the second one, and that is grow. We said we want to deploy 1 billion of growth capital between 2022 and the end of this decade on industrial and gas. So what did we do over there? Well, we delivered and we formed an important joint venture in 2022. That was in India. We used to have 1 terminal, 1 port. We now have, together with Aegis, our partner, 10 terminals, 5 ports, and continue to grow. Why do I mention it over here? Because there's a big element of gas, LPG investments that are taking place in India. And that's also part of the attractiveness that we find in that joint venture that we have in India. It's 1.3 million cubic meters, so it's sizable in the total portfolio and makes us a big player in India. Second one, LNG. You know that with everything that happened here in Northwest Europe, on the LNG side, the demand for LNG and LNG infrastructure increased quite a bit. And we're happy, very happy, with the partnership that we have over a long period of time with GasUnie, and that we are progressing in further investing in LNG infrastructure in the Netherlands. Gate, Tank 4, we started the construction recently, and we're in the final stages of closing on the acquisition of 50% of the Eemshaven LNG facility. So good progress on the LNG developments over there. Then last but not least, maybe not so much for the number, but just to highlight the importance of industrial brownfield expansions. Once you have the position in a large industrial complex, any opportunity that comes because a customer wants to increase its presence or increase its capacity, gives us the opportunity to automatically add the capacity to our terminal, and that's what is going on currently in China. We're continuously building smaller, bigger parts of the capacity, and this is a smaller brownfield expansion in China of 110,000 cubic meters in Shanghai, so in Skip, which is the location that we have over there in Caojing. Now let's take a look at why we find both LNG and LPG such attractive segments to invest in. A bit of a busy slide, I realize that. Let's start on the left, which shows you a couple of the numbers. And I think it's important to realize the expectation of LNG demand is that it will continue to grow between now and 2050 with over 40%. Why is that? Increased demand for energy, continued shift from coal to gas as electricity generation source, and last but not least, depleting natural gas fields. That requires different alternatives, and LNG is a very good alternative for that. So you see continued increased demand for LNG. Second, on the LPG side, a similar story, maybe a lower number in terms of increase, but still on the same fundamentals of increased global demand for energy, a shift or a switch to cleaner cooking fuels in, for instance, India, but also increased demand as a feedstock for petrochemical production. So you see also over there on the LPG side, strong fundamentals as it is with LNG for future growth opportunities. Now, what is it that we have to offer in this space? Well, we have a network of existing terminals that we support both LNG and LPG movements. That's 25 where we currently store that. Why do we like it? Long-term contracts, dedicated infrastructure, and it has a general contract structure of above 10 years, which makes it attractive for us. Now, what's the plan going forward? Well, the plan going forward is that with that experience that we have as a company, together with the current position that we have in the partnerships, we have the opportunity to continue to naturally increase our position in this gas, both LNG and LPG side. Now, are we going for big M&A opportunities? Not that much. We're focusing as much as we can on the opportunities to grow this organically through our own origination, because we feel that that's where most of the value sits that we can capture. Now, where geographically would that then happen? Well, here is the world map, and here are just a few locations to mention and to zoom into on what the developments are that are happening in some of these locations. First, on the LPG side, you know we are very active in the final stages of our development in Western Canada, Prince Rupert. We hope, together with our partner AltaGas, we're very well in the preparation phase to prepare for an investment decision in 2024. And that is moving ahead because we have a fully permitted site, both to build on land as well as the marine infrastructure. So that is moving well ahead and is a big development for the company. Second, I told you about India already and the opportunities that we continue to see in India for further LPG expansion in the current sites as well as new sites that are being developed and currently under construction. Last but not least, China, petrochemical demand. It will take some time, but you see definitely that there's opportunities for further LPG expansion in a country like China around the current industrial complexes in which we are active. Then take a look at LNG. I spoke already about the Netherlands, Gate and Eems, and we have two projects that are in the early phases but look attractive at this stage for us, and that's the potential to develop LNG import into South Africa, together in a strong local partnership, and LNG imports into the south of Australia. Good to mention them to you over here so that you have a view of what's coming in the funnel. Still early days, as I said, but it's good at least to know in what areas we are looking when it gets to LNG and LPG. That's on the gas side. So remember, Grow was 1 billion in gas as well as industrial. So what's happening on the industrial side? Again, on the left, the market opportunities. You can argue about what the right figures are and how many new crackers or pure capacity is required between now and the end of this decade, but you see there's a continued demand, increasing demand for global chemical production, and that requires continued new investments in production capacity. Why is that attractive for us? Well, because we already have a presence in 18 or in 15 industrial clusters with 18 different terminals that we own and operate. Why do we like it? Again, dedicated infrastructure, long-term contracts, and the contract term generally is about 15 years in total. So that makes it for us attractive. And what is it that kind of like brings us to the next phase, and why do we feel that we can play an important role here? Well, look, we are not the ones that are making the decisions on when a new plant is going to be built and exactly where the plant is going to be built. What we do influence and what we can influence is to make sure we are at the right spot, we are there with the right partners, and we have the right capability set to support our customers or any customer that either wants to expand in an existing site, brownfield expansions, or wants to start decarbonization projects in an existing site, one of these 15 industrial clusters, and that makes it for us very attractive to continue to be very committed to this industrial segment. So I still expect in the coming years, maybe with a different speed given where the world sits today, but a very natural flow and output of industrial projects in the portfolio. So that was it on Grow, the 1 billion towards industrial and gas. And here are some of the industrial opportunities and where they would be positioned from a global perspective. I spoke already quite a bit about China. You see opportunities in the Middle East where a lot of new and additional production capacity is expected to be added. We see opportunities, continue to see opportunities in Southeast Asia. For expansion on the industrial side, we see it in Western Europe, and we also see it along the US Gulf Coast on the existing sites that we have with Dow in the Freeport and in Louisiana, but also on the ship channel in Houston, where there's continued opportunities for us to strengthen our position. So overall, you see maybe with smaller bits and pieces, we can still see a good opportunity to invest in this industrial segment. Now let's take a look at the third and last pillar of our strategy, which is accelerating towards new energies and sustainable feedstocks. We also said we want to invest up to 1 billion between 2022 and the end of the decade into this segment. And where do we stand at this moment? Well, we've invested 30 million so far. That's mainly on the repurposing for Los Angeles. We see that there's promising leads that we have within our venture portfolio, as well as the total capacity that we've been able to commission on the biofuel side. What is more important to me and what is less visible for you is the capabilities that we are investing in, the capabilities of our teams, our people that are further developing into this space, as well as the quality of the projects that we see and the quality in the pipeline that we see. Is it geographically well placed? Is it in terms of maturity moving in the next levels of maturity? And that's where we have quite some confidence, also because of the role that we as Vopak think that we can play over there. Now, why do I say that? Let's take a look at this slide to put it a little bit into context, and to put it into context in terms of how a decarbonization journey could look. Let's not go into all the details on this slide, that's not the purpose, but it shows you the different phases of a decarbonization journey over a longer period of time. And no matter whether the icons are going to be inverted in terms of sequence, or there's certain geographical areas around the world where maybe steps are being skipped because you move to a next phase faster or slower, the relevance over here for us is that blue bar that sits underneath. And that is the impact and the requirement for infrastructure. Because no matter where you sit in this decarbonization journey and how fast you move through the phases, the infrastructure requirements are there, whether that's new gas capacity, whether that's liquid CO2 capacity, whether that's ammonia capacity, whether that's maybe down the line different carriers of hydrogen, LOHC, those opportunities will be there. And obviously what is very important is that element of repurposing and adding capacity into the existing sites that we already have. So no matter how you look at it, the speed is going to be different in different parts of the world. Partnerships are definitely required, because on all these icons, there's hardly a company that would go in it alone. So people want to hold hands and actually team up with partners in it that have their own specialty that they can bring to the table. And last but not least, there's going to be infrastructure opportunities throughout the journey that we expect to play a role in. Now, where is that going to happen? That's the key question. And to share with you at least how I would look at it from a biofuel sustainable feedstock point of view, and the next one is more on the ammonia side. Well, first on the biofuels, you see that there's a number of sites globally where today we can see that there are opportunities for biofuels or sustainable feedstocks. Again, you will see this afternoon Vlaardingen. We spoke about Los Angeles. We see opportunities in Brazil. We see opportunities in India. We see opportunities in Southeast Asia. We see them in China. And that is everything from the end products, so the sustainable aviation fuels, renewable diesels. You see that from the green methanol side. You see that coming from feedstocks for some of these products that are being exported from locations. So it's a very natural build-up of capacity and demand for that capacity in the existing sites where we are already have a presence. Ammonia, less dots, because it's much more concentrated, but also on the ammonia side, and Walter will speak about that more in the afternoon, but on the ammonia side, you see that our current experience that we have allows us also to play a role in a place like Houston. We already have ammonia infrastructure. We announced recently that we are moving into a consortium to look for potential blue ammonia production and export from the Houston Ship Channel, and we have a good position there. We have a right set of partners, and it looks like an attractive proposition potentially to move that further. ACE, you know what we're doing here in Rotterdam, a good and a strong consortium to develop a large, big-scale ammonia import facility into the port of Rotterdam, which requires the hydrogen in the end, but the ammonia that will be used to carry the hydrogen is definitely an attractive product for us to take a look at when it comes to Rotterdam. Middle East for potential exports, Southeast Asia, Singapore for potential imports, and we already have a position there. The same goes for China. We already have an ammonia position. So there's opportunities throughout the network with our current experience and presence that we have, with the capabilities that we have and the right partners that we team up with. So what's our plan? Well, our plan is to make maximum use of our existing network, all the locations all the presence that we have in the strategic locations. So build and leverage on those locations to capture those brownfield and greenfield opportunities that will come, and we hope to be able to land, as well as by repurposing some of that existing infrastructure. Second, it's the connections that we have and make sure that we leverage sufficiently those connections for the brownfield and greenfield expansions. And last but not least, continue to invest in the capability set and make sure that we have the right people at the right time available to be that partner of choice for our customers and the communities in which we operate. So that brings me to the end. So in summary and in closing, why do I think that we as Vopak are well positioned for the future of energy? 3 reasons. We are capable to deliver. We have a track record, a good track record in execution, able to deliver value for all the relevant stakeholders. Second, our well-diversified portfolio continues to play well with what's happening in the world around us. And we continue to be very committed to make sure that that portfolio stays very well diversified by creating the right connections in the new locations that we have in mind. And last but not least, the energy transition as a whole, I hope to have been able to share with you, it provides a lot of opportunities. It provides opportunities for us throughout the different phases of the transition. There's going to be different infrastructure solutions that are required, and we are doing what is required to capture those opportunities in the energy transition today and tomorrow. Thank you very much for your attention, and with that, I'll gladly hand it over to Frits, our COO.